Good morning, everybody, and a warm welcome to today's episode of That Crypto Show. We have a lot to talk about today. It's Thursday, September 9th, and we are going to talk about our favorite topic today, which, of course, is trading the crypto markets. My name is Dear Kartik, and I'm the head of trading education here at primexpt.com. And today I have a little bit of a special thing planned for you. I will talk about my personal game plan for the rest of the year. So, what am I personally preparing? How am I personally preparing to take position in Bitcoin and Ethereum? Where do I want to get in? Where do I want to get out? And so on and so forth. However, as this is highly personal and everybody out there has a different opinion on markets and different trading strategies, it's very important that you take to the heart what I'm now going to say to you. So I'm a professional trader. I've done this for 20 years. Everything we tell you on this show is for educational purposes. So our aim is not to give you, a fire and forget solution where you can just copy paste trading. We want to educate you so that you, in the not too distant future, can also decide with a more, with more peace of mind where to trade crypto, when to take positions, how much leverage to use, how to adjust your personal risk return metrics, and so on and so forth. So please, everything I'm telling you is really not financial advice here. I just want to, take the opportunity because the markets are so wild at the moment with the crash that occurred there in all the cryptocurrencies, or almost all cryptocurrencies, that you can have a bit of a look into my mind and how I want to prepare for the rest of the year. So, we are going to focus today on the two main cryptocurrencies, so on Bitcoin and on Ethereum. I know there are a lot of people out there also trading Cardano now. There is Ripple and so on and so forth. However, the market usually follows what Bitcoin, especially Bitcoin and more and more Ethereum are doing. So you'll have a very, very hard time finding a cryptocurrency in the top 20, 30 that has positive numbers when you see a crash in Bitcoin and Ethereum. And that I think also makes total sense if you look at the market capitalization. And we are doing this in brackets. So we'll first talk about a Bitcoin. And I will show you like what those colorful support and resistance zones mean here, where I got those from, what do those mean, what do they mean for the development of Bitcoin in September, and what is my expectation. So I'll really give you a look into my head, how I try to prepare my trading every day. Of course, today we're not going to talk so much about day trading. We are talking about positioning for maybe the rest of a year, depending if the markets, of course, follow my opinion. So maybe get your coffee ready like I do. And for me, always the most important asset in the morning, next to a shower, obviously. And then let's jump right in. So I first want to have a look. I think it was updated now, probably the Fear and Greed Index. So that's always something very important for me. Let's have a look. That was September 8th. We have September 9th now. No, it's not updated yet. Okay. No, wait. Is it here? Yeah, here we go. So 6 minutes ago. Fear and Greed Index. My tool to always determine whether I should concentrate more, that is short term. I'm telling you here on on sell positions or buy positions, so short positions or long positions. It reflects like the current sentiment, so the current expectation of market participants in what direction Bitcoin or other cryptocurrencies should move. And at the moment, we are in the neutral territory. So we fell yesterday from extreme greed at 79 points down to, I think it was 47 points yesterday. So a little bit lower still with 45, which is for me the largest drop I've ever seen in the sentiment, at least I can remember. And this shows now that the market is undecided how things are going to continue. And I think what we saw yesterday, what we're seeing up to now today, is reflecting this very well. Yeah, if you see those candles that have those wicks to both sides, and somewhere, rest somewhere in the middle, so a little bit like the one we saw yesterday, maybe the ones here. Let me quickly mark those for you. Where's my drawing tool? Here we go. So if you see something like this in the market, something like this is always a sign that the market participants are somewhat undecided, somewhat even out. They're not really sure on that day in which direction to continue. And I think what we saw here yesterday and so far today, in comparison to this large red candle we had on Monday, on Tuesday, excuse me, it's like really the market seems to be a little bit undecided for the moment. So that kind of fits quite well into this neutral narrative. Of course, a lot of people were shaken out of the market, a lot of people in shock, probably a lot of people also, are fed up with cryptocurrency trading because it's a scam and so on and so forth. And when you see this narrative in the market, and you can find this very easy by looking at the news at the moment, big news outlets that normally, at least in Germany, that was the case, that normally never report about cryptocurrencies, suddenly were eager to tell, oh, Bitcoin is crashing again. Yeah, it's worthless. It's worthless. It's like, bad news sell, if you want to say it like this. And by the end of the day, of course, they want to generate clicks because they live off advertisement. That's a whole different story, though. So so we have a neutral sentiment. That means if I would like to day trade today, it would give me the opportunity to choose long and short positions. Whereas when we are in a sentiment of greed or fear, I rather would only take long positions in the greed sentiment or short positions. And I'm talking about day trading here now. It has nothing to do with long-term positioning. And like I also said on Tuesday, once we reach this area of extremes, so extreme greed we had, it's always the time where you need to become a little bit cautious, because the market is only biased into one direction. Yeah, you have a pretty hard find, finding voices of concern when you go through Twitter, when you go through Reddit, and so on and so forth. Same goes on the opposite side, obviously, when we are in an area of extreme fear, and we were this back in July. It's almost always just a matter of time until you see market reaction to the opposite. And we did. We saw this volatility squeeze, which led us up, almost 60%. So that has been a nice trade back then. And I took my time yesterday to really look into, what has happened there. I had yesterday the hypothesis, because I saw a lot of open interest in Bitcoin futures being liquidated. That means that leverage positions were built down again. And I had the feeling this might be just a crash that was caused by forced liquidations of traders that use a lot of leverage. So almost every platform out there, Prime XBT also being one of them, offers you leverage, meaning you can, for example, put $1,000 worth in Bitcoin onto your account, and you can trade up to 100 times that 1,000. So with $1,000 on the account, if you want to utilize all the leverage, you could trade 100,000 as a position size. This is very nice because it allows a lot of flexibility when it comes to risk management, but it also, of course, has dangers if you over leverage yourself. If you go all in and the market goes just a little bit against you, your $1,000 of account balance are eaten up very, very quickly. And you get what is called in the scene a margin call. I think there's a movie out there that's also called Margin Call with Kevin Spacey. Very good movie. You should go and watch it. And this is when you are forced to close your position. And we saw on Tuesday that happening to a lot of traders out there at the same time. That's why everybody wanted to or had to get out of the market. We saw the slump downwards. And I got this backed up by data now as well. So if you have been watching the show, you know I'm a big fan of Glassnode, the on-chain blockchain analytics company, and there are others out there that use this data also to come to conclusions. It's always good, not to just rely on technical analysis. If you can back up or prove yourself wrong with what is really going on the blockchain, that gives another dimension to your trading. So, and with companies like this, we have the opportunity that we can get data like this. Data like this a couple of years ago was only available to really professional traders that had a lot of money every month to put in analytics. Now it's basically available for free, so you should go and use it. Glassnode, Blockware, Market Intelligence, and so on and so forth. So, and they also say that the move down was driven by leverage speculators and not long-term investors. Because those long-term investors, as they say lower here, were actually the ones not selling. They were the ones buying again once we saw this big drop. So they were the ones that started buying once we dropped through the 50,000 all the way down to around about 42,000. And this is always a good sign because those larger wallets, institutional clients are usually the ones that are called smart money. I don't really like, this term because it indicates a bit that everybody that is not an institutional investors or professional trader is dumb money. This is not true. But history shows that those investors usually long-term are the ones that are right and are the first ones that also step in if we see a market crash or the market reacts too much to the upside. And we saw this yesterday, on Tuesday. So this really adds oil to the fire that what we saw was a crash that was initiated by over leveraging. And I warned about this in our Tuesday morning show already, that this could be. So we had 3.22 billion US dollars of long positions that were liquidated across all exchanges. Crazy number. 4.4 billion in open interest in the futures were wiped out. And as I said, done by over leveraging. And yeah, another thing that really supports my opinion here, a drop in percentage of spend outputs aged over 6 months, without going too much into detail what that means. This is, like they say here, another way of saying long-term holders sat strong throughout the correction and did not panic. So they did not sell. On the contrary, they bought again. Now, if they would have sold, an indication also would have been that we would have seen large inflows into the cryptocurrency exchanges. But we saw 4,674 Bitcoin over all exchanges being moved off those exchanges. So you would have expected if like there's a whale or somebody big or, a group of people dumping, trying to manipulate the Bitcoin price, you would have seen larger inflows into the exchanges that then were sold. That's a very good indicator. Usually, that there's somebody that wants to dump thousands of Bitcoins, and you can expect the price to react in accordance to that. But we didn't see that yesterday. On the contrary, we saw Bitcoin moving out. And the inflows that we saw to the exchanges also weren't probably enough to really cause a 20% crash, which also validates to some extent my thesis that the crash was caused by over leveraging. And now on chain, where you can see, okay, where are people Where are zones that people bought and are still holding Bitcoins? Where are zones that people sold Bitcoins? You can, mumble those all together, and then you'll get zones which you can translate. And I don't want to go too much into detail now how I do that. Into, where are zones where you most likely will encounter support and resistance. And we had before, if you watch yesterday's show example, so this zone here, which I marked now as a light resistance zone, still was a zone of support. Now it has become a zone of light resistance, because in this zone we have over 1 million Bitcoins that were bought there that are now at a loss. And what is to be expected is that you probably have a lot of traders out there, especially shorter term traders, people that, don't dive really deep into the knowledge about cryptocurrencies and especially Bitcoin, that are very likely to start selling once they are break even with a position again. This is now true for this zone, roughly between, what is it, like 46,000 and 52.5, I think. We still have a zone of strong resistance where we have bought coins from March to May, so that were bought near the all-time high. So, and I said this already last week also, it seems kind of hard that we just pull through this zone, because it's expected that there is at least a little bit of pressure down there. Then right underneath this 46,000, or also starting at 46,000 down to 42,000, we have really a solid support now, because this is again an area where we saw a lot of buying yesterday. And so we can expect, if we continue to move there, that we again see some buying activity there. And this is very true also, of course, for the zone here around 31 to 40,000 US dollars. And so we are probably going to see, should we really go down there, this is very unlikely that we pierce through this. This is as strong as support as this is up here, as strong as a resistance. Now, another thing, and I always propagate that you have to, do your own diligence and come with your own opinion and challenge your opinion, especially also. We humans are a little bit biased. Once we have an opinion, we like to look only for things that support our opinion. This is just natural and to some extent okay. But please also, try to challenge that. But one thing that also sprung into my view really again yesterday, and I think I mentioned this last week also, is this post from Plan B, who goes by the handle 100 trillion US dollars on Twitter. So the inventor of the stock to flow model, which you see down here, and which Bitcoin really still is for me the model that explains best what Bitcoin is doing and how the price of Bitcoin should develop in the future. And here on the 20th of June, and we were back there still in a market that was driven by a lot of fear. I think we were around 35,500 or 60 or 36,000. And he gave a prediction, which is very brave, like to give a price prediction. If you are somebody that has like, I think 700,000 followers on Twitter, you're putting your hat out there. You're putting potentially your hat on a stake. So I have to bow my non-existing head towards him for doing this. And he said, well, worst case scenario he sees for 2021 is August, somewhere around or roughly above 47,000, which he nailed. And we closed August 31st almost exactly at 47,000. His forecast for September was 43,000. And interesting again, the market took a turn here around about at 42,000. You saw a lot of buying on the way down here taking place down again. So it seems like he might be right to some extent here in what he's saying. And he says also, and this is in line very much with what I was expecting, September usually is a month for cryptocurrencies that's a bit weaker. So how that translates into what we can expect for Bitcoin in September, we'll have a look after this. And then he expect October, November, and December to be those crazy, blow off months to the north, where he sees Bitcoin rising to a minimum of 135,000 US dollars. He has a different cross asset stock to flow model, which goes even higher up to 288,000. So if he continues to be right, September might be a month that is still maybe a bit boring. And after this, we will see cryptocurrencies taking off, according to him. And this, in my opinion, supports very good, or this opinion is supported very good what we see in the on-chain metrics now, and which leads to this zones of support and light and strong resistance. So we are now exactly, by the way, also at this 200-day moving average. It's difficult to see here, this purple line, which is around about 46,000. So the market managed to close above that yesterday. We are defending this today. Also very, very important that we stay above that, at least a midterm. I don't say that we cannot dip below it every now and then, of course, but it looks like, that we probably could see something like this in September now. And I also put my I also put my head on the stake there a little bit, I know, but I would like to give you a little bit of perspective of what I'm expecting. I wouldn't be surprised if we see, something like this first. Moving sideways, 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 sideways. And then in October, we see like strong moves up. Maybe we won't like pierce through that immediately, but eventually we'll go towards a next all-time high. This is, please keep in mind, this is not like exactly how I think things are going to be played out, but just to give you a general guideline of what I'm expecting. It might be that we go lower, might be that we immediately go through the roof again. I don't know by the end of the day, but the gist of it, and as I always like to say, is that you need to have a game plan, is that this area here, this dark green area, which I labeled as a solid support, especially this area down here, are, in my opinions, zones where I personally want to buy. I started buying already personally again at 46,000, and I have more orders ready on the way down here that I want to continue to buy. Now, might be that we not go down there anymore. That's okay. When I have a smaller trading positions on the way north that I anticipated, but normally would surprise me if the market, if this was all reaction to the downside that we were seeing. Now, as important as having the game plan ready for whatever your time horizon is, the same applies, of course, if you're just day trading and planning on holding positions for a couple of minutes. It's always important to have a game plan consisting of where do I want to enter the market and what does it take signal-wise for me to enter the market. So what do I base my opinion that I want to enter the market on? And where do I put my stop loss? So when is my game plan, my opinion proven wrong? And where do I start taking profits? And for me is, and this is a bit of a long shot, obviously, I'm fully aware of that, is if I start buying in this zone here, and again, let me take the brush. So if this somewhere is the zone here where I plan on starting buying, because I expect maybe a boring September, but after this a great October, then I'm proven wrong, in my opinion, when we go lower than 30,000. So if the bull market is over, and yeah, of course, there are people out there that say, guys, this is a typical bull trap. Don't be mistaken. We are going lower. We're going to see the 20,000. We are going to 10,000. We're going to 5,000. All is possible. I think it's unlikely, but I'm just one market participant that has an opinion. Might be a strong opinion, might be an opinion that I think are based on fundamental and technical and quantitative facts. But of course, I might be wrong. The next black swan might be just around the corner. I don't know. I'm making things up now. A quantum computer cracking Bitcoin and mining all the remaining Bitcoin, or whatever can happen. And Very unlikely to happen, by the way. I know this is a fear sometimes people have out there, but quantum computing is still not there by a margin, not there, believe me. And so I would be proven wrong, in my opinion, if we close here somewhere below 29,000. And this is a long shot, of course. This is like if I entered now, for example, at 46,000 and I continue buying maybe all the way down to 40,000, I'm like risking like between 11 and 16,000 US dollars per Bitcoin I'm buying. So I have to be smart. If I, for example, say, okay, my trading position size is 10 Bitcoin that I want to build up. Just an example now. I'm not going to enter all 10 Bitcoins now at 46,000. I'm going to have orders here ready, maybe buy one now around 46,000, buy one at 45, 43, 42, and so on and so forth, further down to build up my position. Because one thing that is important and that always, in my opinion, differentiates the professional traders and especially institutional traders from so-called retail traders, so trade-at-home traders, so to say, is that they are willing to give up on a position. So they have what I call a game plan. They know, okay, if this happens, if that happens, I'm proven wrong. I'm going to take my losses and move on to something else. Whereas so-called retail traders are very often emotionally bound with their position. So they want to be right. They say, like, I cannot accept that I lose money now. I will hold on to my position and buy more, buy more, buy more, buy more. The market is wrong. And this is like one expression you should really never take into your mind. The market is not wrong. The market is always right. You are the one, or I am the one wrong, and something we have to accept then. So yeah, this is really my game plan for the rest of the year. We'll see how it plays out. I might be totally wrong. Then we would see a new bear market entering with prices lower than 29,500 on a close basis. Then we know the bull market is over. So that was it. And until the next cycle in what is that, 3 years or 2.5 years starts over again. But if I'm correct, then this might be a good area to buy now. And the risk reward ratio here is very much in my favor again. Even if I would enter here totally at 46,000, places stop loss at 29,000, so that's 17,000 US dollars I would risk per Bitcoin, and my target is and like Plan B is propagating here 135,000. Well, what is that? 54,000 plus 35, 89,000. So when I'm risking 89,000, sorry, I'm potentially earning 89,000 and risking on the other side a down move of what did I say, 17,000. So very, very good risk reward ratio in my opinion. With trades like this, I only need to be right probably 28 to 30% of the time and still cannot lose money or won't lose money with it. But it's a long shot. And as I said before, please do me the favor. You have to analyze by yourself. If you are somebody that likes to day trade more, of course, everything I said there doesn't have any meaning for you then. If you are somebody that wants to hodl long term, you are planning on holding your Bitcoins for 10 or 20 years or for eternity because you think it's going to become the new world currency somewhere in the future, it doesn't mean anything to you. It doesn't really matter then if you buy at 46 or 30 or even 100,000, because the way is only going to be up then long term. But if you, at least for parts of your trading position, maybe have the opinion that, what Dirk just said there can make sense, well, maybe then you can take what I just said here into account for planning your own trading. Again, very, very important. Make up your own mind, challenge your own opinion. Don't just blindly follow others. Don't just blindly follow me. Also, especially, I might have 20 years of experience doing things like this, but of course, that doesn't mean that I'm right all the time. And that's the fun in trading, no? It's like the big, big puzzle that challenges you every day, always to the new. So, summing things up, sideways move, in my opinion, until probably beginning of October, end of September, and then we should see some action to the upside again. My opinion, let's see how that plays out. The same, by the way, goes for Ethereum. And when Bitcoin is rising, most of the time Ethereum will go up more north by margin. It acts like trading Bitcoin with leverage. So what we saw here, this support zone of 3,365 really held on. Seems like we are on the way up again. I wouldn't be surprised to see prices here between 3,800 and 4,000 in the near future again. And also here, the long trade with a stop either below that support somewhere, but you know how it is. Sometimes things can pierce through those supports very fast. The latest below this area here of 3,000 roundabout, excuse my crude drawing here, would be my favorable position. And but also please go into the deep dive and do your own due diligence. As I said, that's very important. Most important, as always, is one thing, two things actually: have a game plan ready, use a stop loss. If you have any further questions and maybe you didn't understand some of the things I said here, or you would like to engage in a discussion with us, you can do so by either sending us an email under academy@primexbt.com, or you can get in touch with us on Twitter at px_academy. If you are watching on YouTube, I would be very happy if you leave us a like, a thumbs up, if you leave us a comment, maybe stating, hey, this is my game plan for the rest of the year. Dirk, I think you are telling BS there. I think we are going further down because of this, that. Please feel free to share your opinion with us there and subscribe to our channel. And we are going to see each other again next Tuesday. And let's see what the markets will do until then. And always remember, until then, to use a stop loss. Have a good weekend ahead and take care. Bye-bye.